Hello there and welcome to this week's Lima market report. I'm here to give you a quick recap of the market performance from last week, October 27th, and look ahead into what's in the radar for the week of November 3rd. Let's talk about and start with equities. The S&P 500 finished the week down approximately 2.5%. It's a third consecutive weekly decline, stuff that we've been talking about and predicting for the past few commentaries. The index has slipped into correction territory if you really talk about a 10% decline since its 2023 high. The Nasdaq Composite have also pulled back, falling about 2.6%. Mega cap stocks names really saw mixed results. Microsoft delivered a strong beat on cloud revenue, while Alphabet came back with a short on ad performance, adding to volatility. So if we switch to the bond market, yields stayed elevated. The 10-year Treasury yield hovered nearly around 4.85%, reflecting continued market tension over the Fed's next move. Bonds caught a bid midweek after weaker housing and consumer data sparked hopes of a potential pause in rate hikes. So what drove markets last week? The standout headlines was the Q3 GDP report showing a 4.9 growth, which is pretty solid, well above the expectations. And when we look at it strong on paper, this sparked over new concerns that the economy might be too hot for the Fed to ease policy anytime soon. So geopolitically, markets remain cautious aimed Israel-Hamas conflict, which has added uncertainty and pushed oil prices a little higher, and which is a key inflation input. We'll talk about energy. Now let's talk about valuation. The S&P 500 forward PE is about 23.1 and is based on expectations for earnings for the next 12 months. That's still slightly high and above the 10-year average of its 16.5, but it's become more reasonable after the recent pullback. Historically, the forward P is about 23.1, is higher than this 23.1 P is higher than the 5, the 10, the 15, the 20, and the 25-year averages. So that shows that a fall pruning is due for the S&P 500. Within that, let's talk about opportunities and risks for the week of November the 3rd. Looking ahead this week, I see both opportunities and risks as always. The opportunity side, selective buying in quality growth and dividend-paying sectors could benefit investors with a long-term view always, especially as valuation improves. On the risk side, all eyes are on the Fed's policy statement from Jerome Powell's press conference this week. While a rate hike isn't expected, any hawkish tone could send markets moving. So, and Friday's expected October jobs report will offer clues about wage pressure and labor tightness. So that's your market recap for this week. Thanks for tuning in. Visit mraadvisory.com for additional info and updates. Have a great week.